Welcome to the Capital Compass. I'm Lindsay Melchek. Today we're zeroing in on Southern Energy, a growth-focused natural gas producer making waves in the U.S. Gulf Coast. And here to break it all down with us, from new wells to bold capital moves, is Mr. Ian Atkinson, President and CEO. So hello and welcome, Ian.
Thanks for having me. I appreciate the time.
Absolutely. I want to jump right into things and start here. Southern Energy's core story has always been about value in overlooked basins. But let's fast forward to this year. I mean, what changed in your DNA? For investors not up to speed, how would you define Southern today? Is this, you're looking for opportunity? Are you aggressive? Are you something else completely entirely?
Good question. And I would start off with people who maybe don't know us well is our DNA has not changed since inception. You're right. We are operating in the U.S. Gulf Coast area, so much different than Canadian companies that some of these viewers and listeners might be more accustomed to. And our strategy has always been to consolidate and develop assets in these areas that have been largely overlooked and frankly, historically undercapitalized by U.S. companies, which even to this day remain very focused on developing shale plays like the Permian and the Marcellus. And maybe to use one of your adjectives, Lindsay, I would combine two of them and say we're opportunistically aggressive. We've shown we can be patient through poor pricing like we've had in the last 18 months. And we've also shown the markets we can be aggressive like we were back in late 2022, early 2023 when gas prices were $7, $8, $9 US per MMBTU. We do have the base assets with significant growth opportunities embedded in them. And at the same time, we're always looking for that right fit for that step function change in scale through an opportunistic acquisition.
Now, you're drilling in the heart of Gulf Coast that we mentioned, arguably one of the most strategically placed and premium price markets in North America. So is this a no-brainer, or are there risks here that others aren't even talking about then?
It really is the heart of the commodity space in North America. You want to be at the market like this is. I would say it was certainly a purposeful decision to set up shop here in the U.S. Gulf Coast. The combination of that premium commodity pricing and underdeveloped assets in this basin do make it a no-brainer for a company like us, which is growth-oriented. To expand on that a little bit, due to our assets location and owning the majority of our own infrastructure, we receive sometimes a 10 to 15% premium to NYMEX for our natural gas pricing, which is quite unique, especially when you compare it to the Western Canadian Sedimentary Basin and most other basins in the U.S., where they receive sometimes a quite large discount to NYMEX for their pricing. Also, this jurisdiction is very interesting for us because it is where the LNG, or the liquefied natural gas export business, has really taken off in the U.S. They have the ability right now to export 17 billion cubic feet a day of liquefied natural gas, and we'll be reaching over 35 BCF a day in 2030. So a massive increase in export scale, which makes the U.S. the largest exporter of LNG in the world. And obviously, when we look to the future, making a very supportive case for the future of U.S. gas pricing, especially in the area of the U.S. Gulf Coast where we are operating.
Now, let's peel back your project just a little bit further. You just closed a $7.2 million equity raise. Tight market, shaky sentiment, where tariffs are the topic of discussion across the board. Now, what gave you the confidence to tap the markets now? And more importantly, how should investors read that move?
It always has to be a very calculated decision for companies like us to go into the equity markets because they are tough. But we can see the supply and demand dynamics for natural gas are fundamentally changing in the U.S., and I think a lot of our investors can as well. Our assets are located within the U.S., which means obviously they're not part of any tariff discussions compared to other countries, Canada being one of them. And the equity raise timing for us was 100% to be offensive, initiating our growth again, heading into summer where we typically see higher premiums for our natural gas pricing than even we do in the winter. As an example, summer coming up, right now, the gas prices are trading at $3.70 US per MMBTU. Our basis premium is about 50 cents on top of that. So we're selling gas into a $4.20 US market, which is equivalent to about a $6 Canadian price if you compare it to the Canadian basin. So we certainly have that opportunity for us here in the summer, and frankly, why we hit the trigger on the equity raise.
Okay, so then let's talk about your wells. You've got 3 new ones online soon, but soon can actually mean a lot of things in this business. So, can you give us a real world timeline here?
Yes, and for those who don't know the company or aren't familiar, we were in the middle of a major capital program that we paused back in the end of 2023 because of the fall of natural gas prices. But what that did leave us was with these three horizontal wells that are drilled and ready for completion at one of our large natural gas assets named Gwynville. A little bit of a history lesson. Gwynville has been historically one of Mississippi's largest producing gas fields. It has produced over 1.2 trillion cubic feet of gas and over 12 million barrels of oil. What we're redeveloping here at that field is 3 zones that have up to 600 to 700 billion cubic feet of remaining gas. So a lot of gas when you look at the context of a small company like ours. But more succinct to the timing, we are planning to complete this first well in late May. We have a date with the pumping services already booked, and that means we'll be bringing this well into production here in early June. The plan from there is to complete the next 2 horizontal wells, kind of one every 3 months, which is more around our facilities capacity, etc. But investors should expect to see a steady stream of results that will actually grow our production and cash flow and prove up over 120 remaining locations at Gwynville. Also, in the program this year, and part of this equity raise was we are planning to drill into some of our higher liquids weighting assets outside of Gwynville starting in Q3 and Q4 of this year.
So you've really ramped up on financing then. You've got the wells ready to go and you're sitting in a prime pricing corridor. So what's the real upside here? What can investors genuinely look forward to in the back half of 2025 that isn't just baked into the share price already?
You know, historically, if people look back at our share price chart, it's been up and down, and we tend to trade very succinctly with the price of natural gas. So we have shown the markets that the torque we have to increasing gas prices, but on the flip side of that, as gas prices fell, so did our share price. So for example, if you look back in 2022, 2023, our shares were trading over $1. As gas prices increased to that $5, $6, $7, and in that year, we were named the best performing stock on the TSX Venture, increasing from 10 cents per share to over $1.40 per share at its peak. You know, I do feel we're in a bit of a better position now even than we were back in 2022 with these wells that we've discussed here today that are already drilled and waiting for completion. So quicker for us to bring them into production and cash flow. So I think we're poised for a comeback after 18 months of what have been painfully low gas prices and very little capital spending. We're very excited to be back on the growth trajectory now.
Well, you've definitely hit the ground running, and there's lots going on in the bucket for you, pardon me, in the well for you. So thank you again for joining us, and definitely come back soon. We want to hear more about this.
I look forward to coming back and talk to you when we have some of these results. So I appreciate your time, Lindsay. Thank you.
Absolutely. Again, that was Ian Atkinson, President and CEO of Southern Energy. To learn more about them, their website is southern.energycorp.com, and you can find them on the venture under the ticker symbol SOU. I'm Lindsay Melchuk with Stockhouse Publishing. We'll see you next time.